All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and take a look at where things are here this afternoon. We have the market vibe, which is it's a 1 here today. Still trending neutral. Going from 2 to 0 to 1 to 3 to 1. It just, sorry, the image is processing. It's just not going anywhere. The internals aren't moving. We really didn't see a move all that much on the Fed on Wednesday. We didn't see a move that much on Friday. They did improve 2 points, but here today they're down 1 point, which is just simply a product of just number of stocks trading above 3, 7, 20, and 50-day moving averages. That's it. It's not one of the real kind of game-changing pieces of the market vibe. So it's one where the market dynamic is still the same. We talked about it this morning. I said there, you can kind of sum up what the market thinks in one chart, and that's the IWM. And that's a pretty big, bad, bullish side-by-side candle here for the IWM. And how often do you see this with the IWM? Not like this. Not with this magnitude of change in the IWM. Here's over the last year. It doesn't exist. I mean, you see smaller ones, right? Like right back here. You see smaller ones, but you rarely will see to this size right here. This is a very bullish back-to-back candle here for the market, for IWM. I guess you could argue we had something similar right back here, but not exactly. But it is a very bullish pattern in every way, shape, and form. And it's one of those, you have bullish patterns in the market and bullish candles in the market. There are some that are more reliable than others. This is a highly reliable bullish candle. What's really interesting is we got that breakout last week. It failed, rebounded back this morning, every chance to give up, and holds firmly here. A lot of it is because of some of the strength in healthcare. And we see a lot of money coming into healthcare here today, this XLV candle. But we see biotech, we see money coming into it as it is green. Okay, we're going to have a trade war. All right, let's go buy biotech because, well, you know what? The U.S. population is going to continue to age, and that is always the bullish biotech argument. And it is one that has worked for many years and will continue to work for many, many years to come. So we see that some of the more kind of trade war centric stocks like a Caterpillar, we don't quite see the same element here in it. It's come back, it's rallied on back a little bit, but still losses on the day. Something like Alcoa, same thing, still losses on the day. Freeport McMoran, still losses on the day, but a little bit of a rebound off the lows. The lows here with it. It's not a whole lot of fun to look at a market that gets a nice big gap in it and doesn't create any real material change. But we continue to see the elements of the market continue to get choppier, continue to get a little dicier, and it is something where this morning's open price, if you're bearish, there's your mark. That confirms the post-Fed sell-off, right? That's where we opened up here today. If you're bearish, you don't really have to look. If you're looking and saying, man, I want to be on the next big bad bearish trend, when is it? What we saw Thursday, what we saw this morning, give you the level. Just say, here, this is where you look. It's above there. Don't bother. Above there, you're just trying to top pick, right? That's it. Breaks that level. All right, now you're talking about something, and let's face it, it's not going to take a lot to break, but it's also not going to take a lot to surge up into a new high here, especially with how resilient the market has been today. Obviously there's talk that China trade delegates are still coming, and as long as they are coming, there's hope that there's resolution and that the tariffs won't be placed on. And let's face it, even if the tariffs are placed on, it's not the end of it. But anyway, that's the level, and the level to keep a very close eye on there. I still look, at the market a little more bearishly than bullishly, but, took off some exposure here this morning, as I mentioned. But I'm still looking for that lower high to come into play. And on the daily chart, do we have a real obvious lower high? No, we don't, right? I mean, we have some if you zoom into a minute chart or an hourly chart. Yeah, you can argue some, sure. But we don't have a real kind of major lower high coming into play. I do suspect that if the market gaps down again, we will see some significant selling follow that gap if it does gap down here again. But I would not be surprised to see a gap up in the FXI in the emerging market ETF tomorrow. Would not be very surprised to see those things gap up here. And I did go buy a little bit of FXI here today. Nothing to write home about, but just for that, as oftentimes when we see China get bashed and then the U.S. market holds up, the next night we tend to see China hold up and add some gains. That's just a tendency. So, just have a little play on there for that tendency. But you can see stocks starting to go green today. There's 150 stocks in the S&P 500 that are green here today. That's a big number compared to where the market opened at. It's a very big number. And if you'll notice, almost everything that's green is at its highs for the day, right? Very little that is green is off of its highs. Most that is red is are way off their lows, and some, just tremendously off their lows here today. Oil has rebounded. Oil sold off sharply yesterday or last night as we, on the Trump news, but oil has rebounded here and actually gone green here over the last little bit. In fact, up about 1%. Is oil. Halliburton's at a very interesting short-term support level, finding a little bit of strength there. This is something I ultimately expect to break down, but would not be surprised to see it revisit 29 and a half first. Here on that, EOG, this one had a really rough week and a half. Nice little comeback here on it today. Would not be surprised to see a retracement start to come in to something like EOG here. We still have the drama wrapped around Oxy for the acquisition of Anadarko and all that, but we're seeing Oxy with similar type of price action. And let's face it, they've priced in the acquisition. It's fully priced in. Whether you want to go with Chevron or Exxon, there's some nice candles, in these names where you can be a buyer, use a stop on today's low, and run with them here if you're looking for some upside. So, it's still one of those where I mentioned this morning, if you're thirsty for upside, go buy some of the best, the Adobes, the Microsofts of the world. Those are going to hold up the best, even in some sell-off, the Visas of the world. These are the best of the best. And, if you have no exposure to the upside, you want some. These are some of the best places to get it in this type of a move. If you're a little more aggressive, that energy area is pretty nice. If you're even a little more aggressive, something like an FXI. But let's not kid ourselves. It's one piece of news, and market revisits the lows very, very quickly. By piece of news, I mean one tweet that could take it on down. So I'm not too surprised that we don't see the market metrics really moving all that much here today. Especially in terms of the cap ratios. We don't see the bullish percent index moving all that much. It's pretty blah when it comes to most of that. We are seeing the continued erosion in performance of emerging markets, China stocks relative to U.S. equities. We do continue to see that erode. That is squarely in the bears' favor. but we continue to see the IWM versus the S&P improve, and it's almost improved to a degree where it's gone from neutral to bullish, and that is a big change in the market over the last 20 to 30 days here. Okay. All right. So anyway, those are just some of my thoughts here as the market kind of gets into the close. Obviously it sets up for a nice week of choppy, a nice week of the market looking for the next tweet, and the market kind of just going, okay, will it, won't it, won't it, will it, and ultimately, it's not dictating any major trend formation right here, and that to me is the most important part, and so it tells us the market still is what it's been, and that's what that's what the message is here today in everything that we see. As I mentioned last video, when we talked about the upcoming 100K challenge, it'll kick off Thursday morning, so looking forward to that. On tomorrow, we'll jump on. We'll go take a look at 2 indicators tomorrow. With everything going on in the market today, did not get a chance to jump on for that, but we'll go take a look at 2 of them here tomorrow. And then I will be around Wednesday morning. We'll talk about things Wednesday morning, and then Wednesday afternoon, I'll be off video, and we'll be back with you Thursday morning to kick off the 100K challenge. Thanks for being with us. Have yourselves a great one. We'll talk to you later. Take care.